It's doing really well, it's growing. I have a long way to go, but I'm very, very happy with it, with the income snowball effect in full effect. And same time, I look back on all these years and I've learned a lot. I've come a long way. It took me many years to learn these lessons, and so I was not born with the answers. It's only through the hard work, through learning, through effort that I learned all of this, and I am where I am now, and I have the success that I have now. But what I want to share with you is, if you're just getting started, it's okay. It takes time. It took me time, and I think it'll take you less time than it took me. That's really the moral of the story today. Hey everyone, this is Ian here talking about dividend growth investing. I'm from ppcian.com. I'm a dividend growth investor. I like to invest in stocks that have rising streams of dividends. I like to drive passive income that will one day surpass my personal living expenses. So today I want to talk about my story, how I've evolved as an investor, because I get a lot of questions on my YouTube channel asking me, hey Ian, how did you get started? How have you evolved over the years? A lot of the reasons I get these questions is I know some of you watching out there are just getting started yourselves. And you're sometimes wondering even, I get these questions, Ian, you've learned a lot, you seem to have your investment strategy together, you're doing really well, but I'm just getting started. How can I get to where you are? How long is it going to take? What are some of the challenges I'm going to face? Well, today I want to share my personal story, and even before that, the moral of the story being it took me a long time to get here. I've been investing in dividends for a very long time. I've been investing in the stock market for a very long time, and I did not get here overnight. It took me a long time. So if you're just getting started, if you're thinking that this stuff is challenging, I don't know where to start, I'm a little concerned, that's okay, because it takes everyone a long time. There's a learning curve. And one thing I do want to share is I think it will take you less time than me. And the reason for that is there's just such great resources online. There are YouTube channels like my own, there are great books, there's great insights. So I think it will probably, hopefully, take you even less time than it took me, and you'll see all of the success in the world. So when I got started in dividend growth investing, or just investing in general, was high school. I was really lucky in that way that I started early. I always had a passion for money. I wanted to start investing, so I started investing in mutual funds. What I immediately learned in mutual funds is that they were not for me. In fact, I had very little control over the mutual funds. I could not select the stocks. The fees were very high. I would say the good thing I learned about mutual funds is that I made about $100 pretty quickly. And this was a lot for me in high school. I was immediately hooked on investing. So the positive is I got hooked on investing. The negative is I quickly learned that strategy is not for me, because I want a more active approach where I can pick the stocks, I have more control, and the fees are lower. So later in high school, I bought my first individual stock through a dividend reinvestment plan. This is Compact Computer. I bought the stock because it had gone downhill. It looked like a value to me. I would say at the time it was a value trap. And what this means is sometimes when a stock goes down, it doesn't mean it's a good value. It means it's going down for a reason. I love to buy high quality dividend growth stocks that have competitive moats, that pay rising streams of dividends, that have low amounts of debt, that have growing earnings. Sure, I like to buy those when they go downhill, but Compact Computer was not one of those. It was what I would say a value trap. It was a business probably in the decline. And so I learned very early on, thankfully with a low amount of money because I was still in high school, that you have to be careful for those value traps. You have to only pick the best stocks, those that will be around forever. So after high school, went to college, early on started investing in tech stocks. It was during the tech boom, and I had some really big gains. I had one stock that went up a few 100%, did very well, got a lot of confidence. This led me to basically become the stock guy. That's what I was known in the dorm. I was trading, I started buying penny stocks. At the end of the day, what I learned from that is that I got a false sense of confidence. That confidence from those tech stocks, and especially that one that did really well, did not lead to me being a great trader of penny stocks. In fact, I started losing some money there, thankfully with low amounts of money. Sometimes I made money, sometimes I lost. At the end of the day, it was a lot of activity for not a lot of reward. And what I learned is that this active trading strategy, this is not for me. And I also learned, don't ever get a false sense of confidence in the market. Always be humble. You're always learning. And so after that, I started really developing my strategy. In college, I was in a club called the Blythe Fund. I was co-president of the fund, and this was a club where like-minded investors could get together, exchange ideas, and we even invested real money, the fund's endowment, if you will. And what I learned there was so much. I learned it's great to be around other investors, to trade ideas, to bounce ideas off each other. So if you're able to do that in person with a local investment club, or you just do it online through either YouTube or forums, all of that is great. I would say also what I learned is you have to be a little bit careful, because there are a lot of ideas coming in the fund. Some were great. I'd say most of them were really great, but not all of them were aligned with my strategy, because I was starting to develop as an income investor. And so sometimes I would buy stocks that were recommended or brought into the fund, and I later found that I would just sell them, or that they weren't for me. And so the other lesson I learned is it's always good to be convicted in your own strategy, to formulate your own strategy and stick with it, and hopefully generate your stock ideas yourself, not from someone else, not from a message board, not from blogs. Come up with it yourself. That's the only way you're going to stick with it. It's the only way to be consistent for your strategy. So next on, after that, I graduated college. I met my girlfriend senior year in college. We later got married. I was getting serious here. This was kind of married life, starting to get ready for workforce. Started getting really serious about my strategy, and this is where I was reflecting on everything I learned so far, and I became a dividend growth investor. I reflected especially on a book I read called Investing Without a Silver Spoon. This was from the Motley Fool series. It's all about taking baby steps, incremental amounts of money in stocks and dividend reinvestment plans. This is where I really started doubling down on that strategy. And later on, we wanted to buy a home, first home, and I needed to sell stock. And this wasn't, it's a little scary because I don't like selling stock, but it's okay. I used this opportunity to prune the portfolio, get rid of the stuff that wasn't quite as high quality. It was version 1 of my dividend growth portfolio, so I had some stuff in there that wasn't core for me for the long term. So I took the opportunity to sell those stocks. We bought the home. Later on, started reestablishing the dividend growth portfolio, and at this point, I'm in a position where I really don't foresee selling dividend growth stocks. I'm in them forever. And I really have, since I pruned my portfolio when we bought our first home, I believe what I'm left with here is just a very robust portfolio. I rarely prune it. It's doing really well. It's growing. I have a long way to go, but I'm very, very happy with it, with the income snowball effect in full effect. And same time, I look back on all these years and I've learned a lot. I've come a long way. It took me many years to learn these lessons, and so I was not born with the answers. It's only through the hard work, through learning, through effort that I learned all of this, and I am where I am now, and I have the success that I have now. But what I want to share with you is, if you're just getting started, it's okay. It takes time. It took me time, and I think it'll take you less time than it took me. That's really the moral of the story today. So just stick with it. Don't feel like when you watch my videos or anyone else's videos on YouTube or blogs that they learned overnight, because it takes time, and everyone makes mistakes. I made a lot of mistakes. I've lost money, but I made it, and you will too. So just as a disclosure, I do not own Compaq Computer. I do not own the fiber optics company I was mentioning earlier. Also, as a disclaimer, I'm not a licensed investment advisor. I'm just sharing my passion here on YouTube. This is not financial advice. It's just my entertainment, sharing my passion with you. And if you are going to get started in stocks, dividend growth investing, just go out and talk to a financial advisor. So Ian Lopuck, ppcian.com. Thanks for watching. I will see you in the next video.